That's awesome. But yeah, like I said, we're going to be going ahead and just hopping right on in. So definitely be sure to just let me know in the chat for those of you that tune in, whether or not, the stream is completely lagging, if you can hear me all right, if you can see everything all right. It's showing me on my end that, we should have good enough service for, the stream to not be lagging or anything like that, but definitely just let me know in the chat. If it's just super bad, let me know and I'll just go ahead and end the stream at any moment. But with that, I will just go ahead and kind of just dive right into the overall stream. So as most of you know, I had to take a pretty big hiatus from the stock market overall for about the last year, roughly. And I actually just spoke to my accountant over the last, 3 or 4 days, as of Tuesday. I spoke to my accountant and he was telling me, for the business this year, I probably need to set aside a pretty large sum of money over the next few months before we head into the 2023 tax season. So with that, I'm somebody that always likes to prepare, as soon as possible, just, get the worst of the worst out of the way, essentially, especially when it comes to finances. I don't like to be, scrambling last minute if I know I have a large purchase, in this case, taxes to come up. So I went ahead and, put all the money aside into my brokerage account, because at first I was thinking, I'll just set it aside in my, money market or, savings account, whatever may have you. But then I was thinking, this money is going to be sitting in here for at least, it's May right now. So roughly 8 months, 8 to 12 months, essentially. So I was like, I don't want that money just sitting there rotting away. Of course, why not go ahead and just put this money into my brokerage account, use it wisely. Of course, don't, just be sitting there gambling, trying to do, futures, scalping or anything like that. But, why not, especially with a down market? As you can see, the TQQQ made a new recent 52-week low at under $27 this past week. Markets are just getting crushed overall. So I figured, why not go ahead and, at least look for some opportunities at the end of the day. And that's kind of what we're going to be talking about today. Is just kind of, over the last 3 days, I was able to start trading, what day was it? Wednesday or Thursday. And we can actually pull up here. TQQQ was something we were playing this week. Those of you that are in our Discord group chat probably know all about that, because I keep you guys updated there, with all the trades that we do. We can go ahead and look at the orders, I believe, either orders or messages. Let's see, I guess we can go to filled. No, I guess we'll go to messages, because the messages, I believe, should show all of our orders. Yes. So we can go all the way back to May 11th. So yeah, 4 days ago would have been Wednesday, I believe. So we started out, what I pretty much did was I started out with just simply being totally upfront with everything as usual on the channel. We dumped $5,000 into our brokerage account for taxes, going to be adding to that over the coming weeks. I want to have essentially somewhere between $15,000 to $25,000 in here for tax purposes and, just overall business savings, essentially. Whenever it's in a brokerage account, you can't just pull that money out overnight, of course. Any money that's in it, even if it's not invested, just sitting there as a money market, it usually takes between, 2 to 3 business days to be able to pull that money out. And of course, any money that's actually invested, you have to sell the stock first. Then you wait the 3 business days for the funds to settle. And then it usually takes, 1 to 2 business days to be able to pull the money out. So in most cases, you're looking between 3 to 6 business days, depending on how it all falls, before you be able to access your money, which, in my opinion, is the best way to go about any kind of savings, not just, in my case for business tax purposes, but just savings in general, especially if you're a spender, if you're the type of person that, you see that, man, I've got a big lump of money over here. I could really use, some new hardwood floors in my house, or, I could use a new car, this or that. Like, if you're somebody that just likes to spend money, like, majority of Americans and people in general are, I think it's a good idea, even if you're not going to be like necessarily actively trading or anything, putting that money in some type of an account that's going to be harder for you to get your hands on, essentially, like a brokerage account or something like that. I'm not saying, put it in an IRA where it's going to be next to impossible to get your hands on, you're going to pay penalties and all this, but put it in something where, like we were debating buying a new car just recently, and, by not having access to that money right away, it gave us the opportunity to take a step back, look at, the positives and negatives, and ultimately come to the decision that, we don't really need a new car right now. So let's just pump the brakes and just, keep working our plan. Anywho, like I said, we put $5,000 in this account. Of course, with a margin account, you guys know that I love the idea of margin accounts, especially for those of you that are more experienced traders, investors, etc. When you're new, I strongly believe you should start out with just a cash account where you can do unlimited day trades because you can't trade with funds that aren't settled. So you have the option to be able to do as many day trades as you want. Where with a margin account, you can really get yourself in trouble if you try to start doing unlimited day trades. Most brokerage companies, they have a setup where you can see the amount of day trades you've done in the rolling 5 days, so you don't have to worry about that. But margin accounts are definitely more ideal for those of you that have at least been trading, in my opinion, for at least 6 to 12 months, got your feet wet, at least enough to be dangerous more than anything, let's be honest. But you at least have more understanding about risks and all that kind of stuff. With margin, you can definitely get yourself in trouble very quickly if you don't know how to do proper risk assessments in terms of what you're investing in, how much money in terms of buying power you want to leave available to maybe buy, add to your positioning. As you can see that I did throughout with like TQQQ, for example. But either way, we'll just get right into it finally. So as you can see, we started off by buying one share of Amazon, just over $2,100. I was debating actually keeping this for a while just because of how much Amazon has dropped. I believe, before the split occurs, it would not surprise me to see this back up over $2,500. As you can see, I did sell it at the very end of the week for $22.50. That was roughly $143, $144, something like that, of total profit overall. And then you can see we started buying TQQQ just under the $29 level. We bought 5 shares at that point. We bought another 5 shares the next day, as you can see, at $27.45, a whole $1.50 cheaper, just slowly adding to that position. When I buy leveraged ETFs, I always like to start my positions very, very small, just because I know the realities of the market, especially with triple leverage ETFs, where the ETF is going to move 3 times whatever the indice that you're trading is. TQQQ obviously following the NASDAQ. With that, I like to average into those positions. A lot of traders will, if you're specifically day trading, that is, definitely you do not want to average into a position because you're looking to get in, get out. You're doing more of a scalping technique, where I personally look more towards more of a swing trade. There are instances where I will day trade something. I was actually kicking myself back on the 11th whenever I didn't day trade Amazon, because I believe it was the same day that I bought Amazon. It did pop up briefly. It popped up like $50, $75, like within an hour, I believe. Or no, it was the next morning. So that wasn't even going to be a day trade. That was still, going to count as an overnight trade essentially. But it popped up like 75 to $100. And I held on to it because, like I said, when I bought it originally, I was thinking about holding it longer term, a few weeks or so until the split occurred. And then, of course, the markets fell a little bit, which is when I loaded up on some more TQQQ the next day. Amazon, like I said, I could have sold it and then rebought back in cheaper. But the whole point being with TQQQ, that was one that I knew from the moment I entered it that it was going to be a longer term play in terms of, going to be at least a few days, maybe even a week. But, the whole point of that versus day trading is you never want to if you're looking to get in and out, you need to make sure that, everything's lining up with your plan. That's not really what I really do. I have done that before. There are instances where, like I said, you just happen to buy it at the perfect time. The markets just bounce super hard out of nowhere. Market, NASDAQ will bounce 1.5%, and then boom, you're up 4 to 5% on your position already. And if that's the case, oftentimes I'll go ahead and pull out and then, look to re-enter. But that's not what I was doing here. I knew that there was a good chance when it was at $29 that this thing could drop. I was even expecting as low as 25. So I was like, you know what? I'm just going to buy very, 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 very small. Again, my account size in terms of buying power was $10,000. And I only bought roughly $100 to $150 worth of TQQQ. And then, of course, like I said, the next night it dropped a little bit further. So we bought another 5 shares, doubled our position. We also went ahead and bought some Home Depot along with the Realty Income Corporation. This ticker symbol O, this is a company that I really, really like in terms of a long-term play. That's part of my overall quote unquote risk assessment is the money. Like I said, this is money that I'm going to be using for taxes in 2023. So I want to be a little conservative with, a good portion of these funds. So with that, I'm looking not just for some quick swing trades or potential day trade here and there, but I'm looking for something that I can hold longer term that can pay me dividends. The Home Depot's paying about a 3% dividend right now. Realty Income Corporation pays monthly dividends that add up to about 4 to 5%. And they've done that for like 30 years now. Very good company overall. And they were massively oversold. It's already bounced. I'll show you guys in a second. I'm up like 6 or 7% on this position so far already. But I bought, I believe 15 shares of this. At the same time, and just kind of, when you do a limit order, sometimes it'll fill a certain amount of shares at different times, of course, to get you at your specific limit order fill. And so that's a position we're holding longer term. We're holding, I think we bought roughly, I forget, somewhere around like $800 worth of this stuff. And then Home Depot, roughly a $500 to $600 position as well. That's also up something like 3 to 6% so far. I'll show you guys a breakdown of my total account here in a second. I'm just starting out by simply going over some of the trades that we did throughout the week. And then you can see we bought more TQQQ, went ahead and bought 10 more shares in a period of just a couple seconds, really. I don't know why it's showing like afternoon, because these weren't afternoon trades. Actually, these were. That is right. Actually, these I did buy in the afternoon after market. A lot of times when I'm buying, I will buy post market, unless if there's a just sudden drop that's just so dramatic from some kind of news headline, then I'll buy, pre-market or during the market. But oftentimes I will buy post market. I'll get an overall look at, okay, what's the market doing today? What have we done so far this week? And again, this is more so for swing trading specifically. I can't stress that enough. I want to take a look at overall, okay, is the market just literally overreacting right now? Is there a good chance that we're going to see a bounce within the next couple days? That's kind of my thought process when it comes to buying after hours. So like I say, you can see we doubled our position to 20 shares. We bought 10 shares right around 27 to 27.30. And then actually we're up to 30 shares at that point. Sorry about that. We had the 10, we had another 10, and then we got 10 more. So we had 30 total shares. Average price was somewhere around, what was it, like $27.74, I believe, was like our average cost when you factored in all these different buying points. And then you can see we started selling. We closed 2/3 of our position at $30.80. During the morning, see, these times aren't exactly right. I can promise you guys, we can look at the chart even, because this 20 limit sell, this was actually in the morning. It was like within the first 2 hours of the trading session. You guys that are in our Discord group chat, you guys saw whenever I said that we closed X amount of the TQQQ position. So that was roughly a $3 and some change cent per share profit, which is roughly $60, $65 that we closed. And then we went ahead and closed the rest of it at 31.50 for an additional almost dollar per share gain. So we, scalped another, well, not scalped, but we salvaged another $10, of profit on top of the profit that we already had. If that makes sense. So, that ended up being roughly a $4 per share profit versus just roughly a $3. So another $40 locked in here. Total position, we made roughly 100. I think the total came out to like $110, something like that. And then, like we said, we closed the Amazon for just over $140. I believe 143. Yeah, roughly $143 of profit. So overall on the week, between, essentially Tuesday, Wednesday until Friday, we made roughly $245 of profit, maybe even 250. I don't know the exact number, somewhere between 240 to 250 of profit, which if we do the math, we'll just call it 245 to split the difference, $245 on our $5,000 portfolio. That's roughly 5% on the week. And that is, again, only trading roughly 3 days of the market week. Because like I said, I spoke to my accountant Tuesday. And then when my accountant told me, hey, you need to come up with XX, XXX dollars, so well over $10,000 for taxes next year. I came back home that night, like I said, kind of just was throwing all these ideas around of, where am I going to put this money so I don't want to touch it. And then I was like, why not go ahead and put it in the markets? Markets are getting absolutely destroyed right now. Every time the markets get destroyed like this and no one's wanting to buy anything, this ends up being an awesome opportunity to buy. Not that I'm thinking at all that we're just going to bounce magically like we did in 2020 or anything like that whatsoever. But I do think this is an amazing trading environment that we are entering right now. I wouldn't be surprised if, we've hit a short-term bottom and we're going to be in some kind of trading range for a little bit. And then we might even, go lower over the next year or two with all the, macroeconomic data that's looking horrible with inflation and all these other different things. But, it's a great time to be, kind of a day trader, swing trader, regardless of what kind of trading style you're looking for. The only one that's going to be getting hurt in the short term is going to be the long-term investor. But those people, they're just constantly buying anyway. So everyone's going to make money in the long run. It's just, I think if you're more of an active manager like most of us are, then, it's a beautiful opportunity to kind of pick your spots and, make a good little decent side income, so to speak, off of your portfolio. But now, anyways, back to, the positions. And I want to check the stream real quick, see if anyone has said anything. Doesn't look like anyone's had any comments or anything so far. And like I said, guys, definitely let me know in the chat if, if we're having any streaming issues in terms of quality, if it's lagging or if the microphone's, acting up or anything whatsoever. Just let me know. That way I can, try to figure it out. Because this, like I said, is our first live stream in well over a year. Like I said, I can see it here that, the title is totally messed up right now. I'm going to have to, figure out this new streaming software that I'm using, but that'll all get edited after the live stream turns into a video. But yeah, like I said, we're still holding, these are longer term holds that we're just probably going to hold or add to forever. Like I said, with the company O, ticker symbol O, we really like this company. Like I said, we're holding roughly $1,000 of it right now. We've already made $58 and some change. It pays a monthly dividend. That's what I like the most about this play specifically, guys, is they pay roughly, let's just say $1,000 is our position right now. They pay about a 4.5% dividend per year. So that'd be $45 a year that they're going to pay us just for simply holding the stock. And in terms of month over month, if we never add to this position at all, which is not going to happen, we're going to add month over month to this position, probably anywhere, depending on the price, anywhere between 5 to 20 shares a month is what I'm planning on adding to this position when it's on sale. But if we didn't add anything to this position and we just held it, bought and hold it forever, didn't add, they're going to pay us roughly $4 a month just for simply holding the stock. Of course, $4, it's like, that's nothing, right? But that's straight up passive income just for holding the stock. And, that's on top of any capital gains, of course, which, like I said, we're already up something like 5 to 6%, something like that. 6.1% is what we're up already. Did not mean to do an order. And we can take a look at this stock first, and then we'll take a look at Home Depot. And then, like I said, if you guys have any stocks you want me to take a look at, just let me know in the chat, and I'll definitely take a look. If you guys have any, sorry, I wanted to pull the stream up that way. If there was any chat or anything going on, then I could definitely get to it for you guys. So as you can see, we could not have bought in ticker symbol O at a much perfect time. We bought it right around 63.50, which is right around the bottom, essentially. Sometimes, the timing is just perfect. You'll see the same thing with ticker symbol HD, Home Depot, here in a second. But we bought this right around 63.50. Obviously, it's up to almost $68 currently. This thing just got massively oversold. It got pulled down with the overall market. I was watching it ever since it went under 70. I just hadn't, like I said, started actually trading it yet. But I knew once this thing got under $70, it's starting to be oversold. I noticed it was consolidating, trying to, at least for a couple days, right around the $67 to $68 mark. And then whenever the market started dragging down this previous week, it brought ticker symbol O down with it, made a new 1 year low, as low as 62.74 briefly. And then, like I said, we popped in right around that 63.50 when we saw some consolidation. Was a little risky, I'll admit that up front, because of course, we had some consolidation going right here, and then boom, we took another leg down. So my reasoning behind that, one, like I said, this is something I plan on holding longer term. So I wasn't afraid if it continued to go down, I was going to buy some more. But then, like I said, sometimes you just buy things at the perfect time and they start going up. Do I think it's just going to keep going up? No, I do not think that whatsoever. Kind of like the rest of the market, I think we just saw a ridiculously hard bounce. I think it's a lot of shorts covering more than anything, to be honest, especially Friday's rally. Friday's rally screamed short cover, in all honesty. Different topic for a different stream, but definitely like the price point we got in with this. If it does, decide to come back down and retest that 63.50 to $62, somewhere in that range, then we will go ahead and load up. Like I said, I plan on adding anywhere between 5 to 20 shares a month to this, because like I said, this is something I plan on holding longer term, just as part of our longer term portfolio. As you can see, the stock tends to stay pretty sideways, anywhere between like this $64 mark up to about $74 to $75 mark. Even if we go back as far as, let's do a different time frame. We'll just go out 10 years and we'll pull up a weekly chart. So if we look at the weekly chart, you can see here, it has, kind of stayed in between on the low end, usually around $50, to a high end of about $75. Of course, before COVID happened, it got up as high as the low to mid 80s. You can see a perfect little double top here, right around $82. Briefly hit that $85, just like the rest of the market. We had a massive blow off the top right before we started coming down when COVID, the COVID crazies took over the market. And then, a lot of fluctuation there. But overall, ever since the COVID recovery, right around July of 2020, it's been roughly right around this $58 to $70, we can call it $72.50, I guess, $58 to $72 price range. And, pretty much a majority of the last year, specifically year to almost year and a half now, it's been in between this like 65 to 72.50 price range. It's a very choppy price action. You could trade it, I guess, if you want to. I just think this, me personally, I think this is just a good company to like kind of buy and hold forever. they've, like I said, they've paid out an average 4.5% to 5% yearly dividends for something like 30 years, or I forget when they were listed. I want to say 1992 or 1994. So, like I said, right around 30 years, they've been paying that average dividend, and they pay that dividend every single month. And if you just look into the actual company, you can, of course, pull up their website and see everything that they buy. It's a REIT. They're heavily into like commercial real estate and that kind of thing. So if you look into all the fundamentals of this company, I just think it's a good long-term company. Now, of course, when it comes to individual stocks, you never want to just simply go all in or anything like that. Like I said, we're only holding about $1,000 worth right now. And, as we add money to the account, we'll go ahead and buy a little bit more. But I do think, like I said, this is a good long-term play, so I don't mind holding it and adding to it. Now, if it does start testing the 72.50 and it starts, having a tough time, or even before then, 70 to 72.50 in that price range, and it starts having some trouble, I might go ahead and sell it just, out of the fact that, I can always go ahead and rebuy, re-enter. But at this specific point right now, being up 6%, yeah, it's great, but like I said, I like the dividend income side of it as well. I might as well go ahead and at least capture that dividend income before doing anything. And if it does, for some reason, with the overall market, take another leg down, then I'll go ahead and add more shares because I love this company overall. And that leads me also to ticker symbol HD, Home Depot. We'll go ahead and pull that up as well. So with Home Depot, you can see here, kind of has been moving, like the general overall markets, of course, one of the largest companies in the U.S. Had a lot of trouble right around $400 to $420. Again, just like the markets, struggled to kind of make any new highs once it did make a new all-time high. And then, of course, with the overall markets, just has gotten pulled down over the last roughly 1 month or so, really ever since the whole Russia and Ukraine spat began. Made a recent low, not like 10-year low. I'll go ahead and pull up the 1 year so we can just kind of get a breakdown of how it's been moving over the last year. And we'll push this back to a 1-day chart. So, made a recent 1 year low, just like ticker symbol O and many other companies have right now. Ticker symbol HD, Home Depot, made a recent 52-week low at $280. We bought this stock, I believe, at what price did we buy this at? I want to say $281. Again, it was another stock that we just happened to just be looking at the right place at the right time. Yeah, $281 on the dot is exactly where we got into Home Depot. So not quite at the all-time, or not all-time, at the 1 year low or anything like that, but pretty close to the 1 year low. I mean, 37 cents off. Again, sometimes you get in at the right time. Not saying, again, not indicating at all that I'm thinking this thing is just going back off to the races up to $300 to $400 again or anything like that. But again, a company that does pay a nice little, I think it's like 2.89 or something, somewhere around 2.5% to 3% dividend. The dividend is coming up, I believe, the first or second week of June. And I do not mind. This is something that I don't plan on trading. This is actually one that I do, regardless of what the price action is, unless if it shoots up randomly in the next couple weeks, like 350, which I don't see happening. I do not plan on trading this. This one I do plan on holding for some time. The target sell is actually somewhere around this 370 to 380, just because I do see here that, we had, whenever we had the original bump up to 420, we had a lot of consolidation for roughly a month or two around that level. And even when we came down, you can see, boom, popped right off 350, and then it could not break this 370 level again back in February. So, Home Depot has really been kind of selling off before the rest of the market, started coming along with it. And, this is way back at the beginning of February. It struggled to break 370. So, 380 is my target, but I do think, this 370 level is going to be an area to watch. If it starts to struggle at 370, I'll probably go ahead and sell it off at that point. But like I said, it's not going to go there overnight. It might even go lower with the overall markets in the coming months. It's just one that I don't really plan on, like I said, trading unless if we can just get a crazy return out of it. On a massive market bounce or something like that, which, like I said, I don't really see that happening. So something that will probably add 1 to 5 shares every few weeks, every month or so, at a good price, of course. And then other than that, that is all that we're holding at this current moment. The futures market is set to open here in the next 45 minutes. So with that, we'll get a look at TQQQ first, which for those of you that are like newer to the markets, that is the triple leverage ETF of the NASDAQ. Essentially, it just moves 3x whatever the NASDAQ is going to move. So I want to address something that I've seen a popular YouTube. I'm not going to call him out or anything like that. He's actually somebody that really got me into the markets to begin with, but I just wanted to address something that I seen on one of his videos that I don't think a lot of people really take into consideration when buying these leverage ETFs. So I definitely want to address that for you guys. So when it comes to these leverage ETFs, a lot of people, like right now, for example, are looking at the fact that, holy crap, TQQQ has gone down over 2/3, right? 90 to 30, that's essentially like a 65 to 70% drop, right? So a lot of people are looking at this right now around this $30 mark, and they're like, wow, I could 3x my money if the market just returns to all-time highs, essentially. And that's not exactly true. So it's really hard to explain in one video. I might try to find some article. I actually read articles. I just need to find it for you guys, kind of with how these leverage ETFs work. But with these leverage ETFs, they're heavily dependent on options trading. It's a combination of options, futures, a little bit, I believe, of the QQQQ ETF as well. But it's very dependent on, the options market and futures market specifically is what these, you really need to pay attention to. What is the ETF, compiled of? It's not just simply somebody created an ETF and said, oh, the price action is going to move just 3x, whatever the NASDAQ is moving. It's not like that at all. There's things just like any other ETF or any other index that you're buying, index fund, mutual fund, growth ETF, tech sector ETF. Everything is made up of different, stocks, different futures, options plays, all of that. And these triple leverage ETFs are very, 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 very futures and options driven. The problem with that is when they come down really, really hard, they come down much harder, more times than not, with the time decay of the contracts and all this other stuff that goes into it. Like I said, it's very hard to kind of just explain in a quick, segment of a video. But just to keep it short, the NASDAQ, just say, for example, best case scenario, the NASDAQ runs up and retests all-time high. That does not mean that TQQQ is going to triple or anything like that. I worked the math out, actually. I wish I had it pulled up still on my phone for you guys, but pretty much for TQQQ, just to go up to $80, you would need a bounce of roughly 53% in the NASDAQ. So if we pull up the NASDAQ here, and the reason that I said $80 was because that was actually the example that was given in this video that I was watching. And again, this is a trader that I actually really respect. I've been watching him across his content for the first. He's actually talking about TQQQ and holding it with a price target of $80. And it kind of intrigued my thought process, how I think about these leverage ETFs. And I even brought it up in his comments. I was like, man, $80 is going to be very, very tough. So, the NASDAQ right now is somewhere around what, 12,000, we'll just call it 12,350 for an easy number essentially. So for TQQQ to go up to, again, $80 in this example, you're needing the NASDAQ, like I said, to go up roughly 53%, which is, again, in a very short amount of time as well. So, I mean, how often do you see the market run up 53% to begin with in a short time, right? I mean, 53% usually takes, on average, based on market returns, usually 5 years. But let's just say in a perfect world, the NASDAQ goes up 53%. So if the NASDAQ goes up 53%, we're at 12,300, we'll just say 360. 12,360 times 53%. That means the NASDAQ would go up 6,550 points from here. So if the NASDAQ went up 6,550 points, you're talking about a NASDAQ of roughly 12,360. You're talking about the NASDAQ sitting somewhere around 18,500 to 19,000. Just put in perspective, the recent high was 16,700. So you're pretty much talking about the NASDAQ making a crazy new all-time high. I mean, for it to go, let's just round up because the number was 18,910. Let's just go ahead and round up and say it goes up to 19,000. You're essentially saying that the market is going to go up. That's roughly 2,300 points divided by the old high, which is 16,700. You're talking about the NASDAQ making a new all-time high by 13.77%. So again, when it comes to, take that back to TQQQ, we'll go back here. It's not as black and white. It's just saying, if this thing will pull up, it's not just as simple as saying, oh, the NASDAQ just needs to go back to its all-time high. It's not how it works. It's not how it works at all. Like we're saying, this example was just assuming TQQQ would come back up to $80. Like I said a minute ago, there's a whole lot that goes into that in terms of time decay, because these leverage ETFs are very, very, very options market driven. They fall much harder than they go up. Like I said, there's so much like mathematical stuff that goes into that. But the main thing is at the end of the day, when you're talking about, okay, what's it going to take from this current level to get to $40 or $50 or $80, whatever dollar level that you're whatever price target you are actually looking to achieve. Sorry, I'm having to pull up the chat. And like I said, if you guys have any questions or anything, let me know. I got the chat pulled up over here. That's why I keep looking back from time to time. But when you're looking for any type of price target with these leverage ETFs, you need to factor in, okay, how much is the market going to need to go up? Pretty much the rule of thumb is essentially whatever price target I'm looking at, you need to multiply, hence, it's a triple leverage ETF. You need to think, okay, if I want to achieve a 20% return on TQQQ, then I'm going to need the NASDAQ futures to go up, or, simply more simple terms, just QQQQ. I'm going to need that to go up roughly just under 7%, like 6 3/4, something like that. So, 6 3/4 on that 12,000, whatever it was, 12, we can pull up the calculator here. It'd be easier to do it this way. This thing will pull up for me. So 12,000, what was it? 12,360 or something like that. 12,360 times, we'll just call it 6.5%. That would come out to 803 points to the upside for the NASDAQ is what you would need. So if we go back to the NASDAQ again, I'm just laying out these examples for you guys because a lot of people look at what the recent high was. They don't consider how much the market is going to have to go up. If the market goes down, say 50%, you essentially need to double your money to regain that loss, essentially. So if we had an 800-point move to the upside on the NASDAQ, that would put us at roughly 13,200, essentially. So 13,200, that's going to be, actually, that's probably a realistic price target, in all honesty, for TQQQ, whatever 20% comes out to in terms of a price point. Because you can see we hovered right around 13,000 to 13,500 for a couple weeks, or about a week or two of trade. So that actually is a decent price point if you're looking at a good little swing trade potential on TQQQ. But yeah, I mean that's how you have to think about your price targets in terms of these ETFs, specifically the triple leverage ETFs. Pretty much you have to kind of do reverse engineering on your math. You need to say, okay, if I'm wanting 15% return on a triple leverage ETF, that means I need at the minimum a 5% return on its predecessor, the NASDAQ, for TQQQ reasoning. So like I said, I really look up to that guy. I know there's a couple of you that follow him and me. You might know who I'm talking about. Like I said, I'm not remotely throwing any shade whatsoever. It's just something that I wanted to bring to everyone's attention in terms of how you got to think about these triple leverage ETFs. Because in my opinion, a more recent price target for TQQQ is probably going to be somewhere around $40. I think around $40 is when TQQQ is really going to struggle, because like I said, for the NASDAQ, you're talking somewhere around 13,200 roughly. Just a rough estimate. You're talking about roughly at 13,200 to 50 level, 500 at the most. And that is where, that was kind of holding the market up, which for TQQQ was between 35 to $40. So, if you're looking for a good little swing trade on TQQQ, I think your price target personally should be somewhere around $40 with, a cover your profit in terms of if it starts to fall to the downside. If you're entering in a perfect world, say you enter at $32, say it's at $32 in the morning, I think you'd be best, in my opinion, if you're looking to swing trade it, set your target profit at $40 a share and set your stop loss probably at 30, and then keep your eye on it, set some alerts that say $35, $37, etc., and then start keeping your eye on it. Set some new alerts if it breaks through those levels, set new alerts to the downside, or better yet, just set a trailing stop loss at plus or minus, X percentage points. For me, that would say it gets up to 36. I would go ahead and set a stop loss at a trailing stop loss. Sorry about that. A trailing stop loss probably of like 34.50. That way I'm at least covering my profits if it decides to reject in this $35 to $40 price range, which is very, very, very possible in this current bear market, situation that we're in. It could easily be just another bull trap at the end of the day. So, these leverage ETFs, they were never, ever, ever intended to be something as a buy and hold forever. They are just, another tool to add to your tool belt in terms of active trading, investing, being an active investor. When you see opportunities of volatility in the market like we're seeing right now, you can make some very good returns. I mean, guys, this damn thing was up. At one point, it was up like 12, 13% on the day Friday in one day. Very, very, yes, there are periods of time when the market is, kind of just going straight up and you can just buy and hold and add to that position on the red days, etc. But when the market has shifted and we're in more of a highly volatile, pretty much the NASDAQ is in a bear market. But specifically just higher volatile times, they're not the times to be simply just buying and holding these leverage ETFs. They were never intended to be bought and held forever. They're intended to be, actively traded, they're for actively managed hedge funds more than anything. So just keep that in mind when you're buying these ETFs, specifically the leverage ones. If you're looking for something more of a buy and hold forever, something that you want to add to longer term, just stick to the basic stuff. The QQQQ, SPY. I think DIA is the Dow Jones one. If you're looking for quicker returns in terms of day trades and swing trades, that is where your TQQQs, SPXL, I forget the Dow one, UDOW, and then their inverse ETFs are obviously SQQQ, SDOW, SPXS. That's a tongue twister. Say that 10 times. Those are the ones that you're looking to kind of just hop in and out of. They're not something, like I said, especially in a highly volatile market like we're in right now, they're not something that you want to buy and just say, oh my God, a few months ago, this thing was at $90. I'm going to set my price target at 70. Because, what are you basing that off of? You're not taking into consideration how much the market's going to have to rally. It's not like just buying, just a random stock. Let's just go to a random stock, one that's getting hammered right now. Let's see. Oh, I know one that's getting hammered right now. Netflix. Yeah, I mean, not just like buying an individual stock, say like a Netflix, a Tesla. I know there's a bunch that are just getting obliterated right now. No, Netflix is one of them. So it's not like you're just buying Netflix, for example. You're going, holy crap, there's a huge gap fill here, huge opportunity to like double my money, if not more. That's not how leverage ETFs work. It's not how they work. It's not something that you can just look at the recent high and think that it's just going to get to there. You have to work out the math, guys. You have to factor in, okay, last little rant on it, and then we'll move on. For TQQQ to go from $32 to $80, that is, we'll just do the math on that. $32, or no, I need to do $80 divided by 32. That comes out to what? 2.5x. So essentially, yeah, TQQQ is going to have to go up 2.5x from its current price point. That's a lot. 2.5x. So that, 2.5. What does that mean? How does TQQQ go up 2.5x? So if we know this thing moves 3x, whatever the NASDAQ moves, what does that mean the NASDAQ is going to have to move? That means that the NASDAQ is going to have to move roughly, divide that by 3. The NASDAQ is going to have to go up. I must have done my math wrong. Surely that can't be right. It's saying that the NASDAQ would have to go up 83%, but I know I must have did something wrong because I just broke the math down for you guys a little bit ago. Surely not. But yeah, that was saying that the NASDAQ have to go up 83%. Well, yeah, no, that's actually right. Yeah, I think that's actually right. Someone let me know. I know I see one or two of you guys are watching right now. Let me know if my math is wrong because I think that's right. Because, yeah, that would go up 2.5x, which would mean that the NASDAQ would have to go up 80%, essentially, 83%. So, I mean, guys, the math just doesn't work out for this getting back up to $80 anytime soon. That's why I was saying in the comments of this video I was watching that, the math just doesn't add up. There's a more likely chance that TQQQ and SQQQ actually go through a stock split where that's going, similar to like Amazon stock split, of course, where you're taking, shares off the table or adding shares to, whatever the case may be. There's a more likely odd of this thing, going through a split essentially, which is going to, totally change the pricing and all that kind of stuff. Just like whenever SQQQ got massively, just pushed down to the downside because of the time decay of the options contracts and all that. I believe SQQQ got all the way down to something like $2 and change or something like that. And, at that point, once they become, pretty much penny stocks, close to nothing, at that point, you go through the spread change where, they're going to be taking shares out of, the higher of the two. In the case of last year's TQQQ, they got shares added to it, and then SQQQ, they're essentially removing shares to pretty much bulk that price up. Essentially, it can get so confusing when it comes to the leverage ETFs. But again, you just got to break the math down. The math isn't very hard. Like I said, the main thing is when you're looking at your target price, just remember that whatever you're expecting TQQQ to move, or SPXL to move, or UDAO to move, whichever one you like to trade the most, whichever one you are looking at in terms of what your target price is, just factor in, okay, that means that in this example, /NQ, the NASDAQ is going to have to move X amount. I know we went on that for a minute. I don't know how long I went on that rant, but I had to bring that to everyone's attention just because it's very easy. I even have a couple family members who, they're trying to trade stocks and do that kind of thing. And they unfortunately got caught up buying TQQQ back in the 70s, back in the 80s, on the way up, down here in the 50. I think this was actually before the stock split, but whatever the case may be, they got caught up buying it while it was, very, very high, and they've held it all the way down, adding to it. And it's not a good situation at all. I mean, the best thing you can do if you're in that position, which I hope none of you guys are, but the best thing that you can really do, in all honesty, is on days like this past Wednesday and Thursday when this thing's just getting absolutely hammered. You got the RSI dropping down, which, by the way, I have my RSI set at 80 and 25. So if you're wondering, the market was oversold multiple times, why is my RSI not showing that? I have my RSI sets very high and low. I believe the average is either 30 and 70 or 40 and 70, something like that. And I have mine set at 25 and 80. So I'm pretty much seeing, when the market is getting massively overbought or massively oversold in the short term, of course, not meaning that, as you can see down here, we showed that we were massively oversold. We did have a short-term bounce, but that did not obviously mean that we were going to continue to go up. So that's why I used to be super indicator driven. Now I just kind of play price action more than anything. I've had most success with that personally. I just use the RSI kind of as a heat and cool indicator more than anything. But the best thing you could do is whenever you see that we've just been massively just being hit so hard in the markets, try to add to the position when you can. And then on the next, 5% jump in the market, which would be like 15% jump for TQQQ, just going ahead and closing that position out. I know it's going to suck. You're still going to be closing at a pretty massive loss, but you don't want to get caught holding these guys in a bear market. You don't want to. Your account could just quite literally explode if you're not careful. That is why, like I said, I never suggest people buy these things long term. I suggest you, if you're going to buy these, hold them for anywhere between a few hours to maybe a week or two at the most, get rid of it, and then look to re-enter, at least some kind of a discount, even if it's just a few bucks a share, something like that. But yeah, in terms of, I'm going to go ahead and start wrapping the stream up, but, I wanted to, before the market does go live, just kind of give my little 2 cents on where I think the market is going from here. We'll just pull up the S&P 500. We'll take a look at S&P 500 futures and the NASDAQ futures briefly. And then, of course, if you guys have any stocks you want me to take a look at, feel free to just let me know in the chat. Like I said, I'm checking those periodically just to see. And I think we're supposed to be live on Twitter as well, but I do not know for sure if we are. We are live on Twitter. Okay. So, yeah, for those of you on Twitter, YouTube, whichever one you're on, if you have any questions, just let me know in the chat, and I'll definitely, answer those to the best of my ability. Or if you have any stocks you want me to take a look at, same deal. Just let me know, and I will answer those to the best of my ability. But with that, we'll just go ahead and take a look at the broader markets. I want to take a look specifically. Let's see, time frame. I just want to go out just a little bit. We'll do a 1 week chart and we'll do 5 years specifically. Why is it not working? Okay, something is going on with my chart. Oh, I bet you it's doing the actual contract. Let me go over to SPY. We'll just do it by the, I mean, it's going to look the same anyways. It's because these contracts, they create them, I forget how many years out, like 2 years out, 2 or 3 years out, and then they expire at a certain time. So here we go. We'll just do the ETF of the S&P 500 and then the ETF of the NASDAQ. So looking back here, we're going back as far as middle of 2017 till now. You can see, of course, we've had this massive run up, massive uptrend, which has just recently been broken. The uptrend was broken at 420. Of course, the uptrend was broken back in 2020 as well. Uptrends being broken doesn't necessarily mean that it's time to freak out and panic sell everything. As a matter of fact, we did have a very bullish ending to the week. Again, in my opinion, I think that's just a massive short cover rally. I would not be surprised, however, if that continues into next week. We've had something like 6 or 7 weeks of continual selling in the market, which, that just indicates that, we're getting to be, oversold, at least in the short term. I would not be surprised if we see the markets bounce over the next, anywhere between 1 to 2 weeks, maybe even drug out depending on the price action we get. Wouldn't be surprised if we see pretty much like a 5 to 10% range over the next, couple of weeks or so until the next Fed meeting where they decide the next interest rate hike. There are talks about, the Fed potentially deciding to start raising rates by 0.75% instead of just 0.5 percentage point. I think if that happens, the market's just going to get absolutely destroyed at that point. But I think in the meanwhile, you're going to see kind of this like 5 to 10% market trading zone, which that's what I was referring to earlier whenever we were talking about what to expect in terms of a swing trader, day trader market versus an investor market. The market over the last, with the exception of the little blip in 2020, has been very investor friendly, where, right now we're kind of entering more of a bear market, which is definitely going to be more friendly to traders, of course, especially if we're going to be entering this volatile period. We had a period similar back in 2018. If you guys remember, 2018 through majority of 2019, we were kind of stuck in this very choppy range in terms of where it was on SPY. It was between like 24, I guess that'd be like 2,400 roughly on /ES, the futures, but roughly 240 on the ticker symbol SPY, which of course is the ETF of the S&P 500. Moves directly with the S&P 500. We were in this range between like 240, just below 240, upwards of 300. We just could not break through 300. Occasionally, we would just barely peak above 300, and then boom, we'd go right back down to around like the 280 range. We were just really stuck in between like 240 to 300 for damn near 2 years, it felt like. And then finally, right before November of 19, it was either November, December of 19, we just, boom, finally blew right through 300, and we just kept going up. We hit around, of course, 3,400 on on S&P 500, which is about 340 on SPY. And then, of course, the COVID crazies took over the entire world and, drug the entire world economy down, which we are now paying for 2 years later as well. The Fed, pumped a whole bunch of money into the market, printed trillions of dollars. We could get into a whole fiasco about, how this all could have been avoided, especially if people would have voted differently in 2020. But we are where we are now, and we are now finally having to pay for those consequences. We're paying the consequences for our actions. So with that, like I said, I do expect longer term in terms of over the next year or two, I expect us to probably retrace. I would not be surprised at all if we retest this 340 area on SPY, which in terms of the S&P 500 would be somewhere around 3,400. That's the beauty of SPY. In terms of how it trades, it usually trades roughly 1/10 in terms of what the price looks like, so to speak. So, if you're talking about 480 on SPY, you're talking roughly 4,800 on the S&P 500. Makes it a lot easier to talk about, so you're not bouncing all over the place. Unlike the NASDAQ with QQQ, those are vastly different numbers. But yeah, I just would not be surprised at all. I'm not saying that we're going here next month or anything crazy like that. I'm just saying that with all of the massive issues we have underlying with the economy, that are just kind of beginning. Also, keep in mind, the market has already dropped massively over just a couple of interest rate hikes. Interest rates are just now hovering around 6%. Probably heading towards 10. In all honesty, I think we're going to see 10% rates before the Fed kind of takes the foot off the gas. That's my own opinion. I'm interested to see kind of what you guys think in the comments, either after the video uploads or if you're watching in the chat, what you guys think in terms of where we're going in interest rates. I think overall you're going to see a housing market crash, not anything like 08, 09. I know there's a lot of people calling for that. I'm not thinking anything like that. I do think, though, you're going to see housing prices definitely pull back big time. I think, it's reasonable to think anywhere between 10 to 20% for housing prices is definitely reasonable. I do think we're going to start to see a lot of layoffs. We just heard Carvana. They're still a newer company. I get that, but they laid off something like 2,500 to 3,000 employees last week. I think that's kind of just the beginning. I think you're going to see a lot of these tech companies specifically laying people off, which is super unfortunate, of course, but it's ultimately sending us into a recession. Obviously, we just had 1 quarter of GDP shrinkage. Of course, to meet the terms of a recession, you have to have that happen twice. I think we're on our way there. And just when you look at if you're more of a technical analysis person, you can see a perfect head and shoulders pattern here within the market too. And of course, we're heading down. A lot of people will think this is kind of a bullish wick right here. I do not believe so. I think in all honesty, we're probably going to fill and retest that. But none of us know, of course, at the end of the day. This is just kind of my own 2 cents. I think, in the short term, we're probably going to see some kind of a bounce upwards of 420. I think that's where it's going to reject, and we'll probably either A, retest 400, or B, make a new recent 52-week low and keep heading lower. I think that's more likely to happen. But then again, I wouldn't be surprised if we go to 420, get rejected, bounce somewhere around 380 to 400, and we just kind of trade in this pricing, in this tight, window, kind of like we did back in the 2018, 2019 trading sessions. And either A, we pull ourselves out of it like we did back then, or B, we, continue to go down and actually see a pretty bad recession. They say never bet against America, of course, at the end of the day, but eventually everything is going to catch up to us. But until then, it's kind of just more of a speculation game. I think for us as traders, though, that's going to make for a beautiful trading pattern over the next, regardless of which way it plays out, upside, downside, side to side for a little bit. I think regardless, it's going to make for an amazing trading opportunity over the coming weeks, coming months, maybe even over the next year or two. Because let's be real, it's really, really boring to just simply, it's easy money, I guess, if you're the type that can stomach just buying every dip, but it's really, really boring at the same time to just simply buy the dip, buy the dip, buy the dip, buy the dip, all the way up until eventually there's no more dip to buy and it keeps going down. And then, like I said, we'll take a look at the QQQ, which is, of course, hand in hand with the NASDAQ. I have pretty much the same opinion on QQQ that I have of SPY. I think this thing too, same idea. I think we're going to probably enter a more wider trading range. I think this thing still has some more room to go to the downside before we actually, find some solid footing. But even if, say this 280 to 300 is kind of the floor, essentially, I do think you're going to see a wider trading range. I think you're going to see, a test of 280, and then I think you're going to see it try to test 340. That's a $60 price range. That's a big movement. If that's the trading range, I think at the minimum you're probably looking somewhere between the price range, which even that, like I said, that $45, $35 to $45. So lots of good trading opportunities. If you have the capital available, and if you're really into options, you could probably play like an Iron Condor here. I would not do that this week. I would, like I said, let's see kind of where the market actually goes. But say that it looks like we're going to enter a consolidation phase, you could place a pretty cool Iron Condor somewhere between, say, like that 335 maybe. Between 335 and like 280. It's a pretty wide range, but it could definitely pay you a good credit if you're selling it. I guess you could buy it too. I don't really play those anymore personally, but that's just an idea maybe that you all could consider if you're options traders specifically. But in terms of where I think the NASDAQ's actually going to go, again, we're just kind of speculating here like everybody at the end of the day. I think ultimately, same idea. I think we're going to see a short-term bounce between 320 and 340. Got to get rejected, come back down, retest the recent low between 280 and 300. And either A, it's going to break down and make new lows, or B, it's going to bounce. And again, we're going to be in this, pretty wide trading zone over the next, who knows how long. Most economists are estimating 1 to 2 years at the minimum. So we shall see what happens. If you're new to the channel, we'd love to have you here. Definitely consider hitting the subscribe button below and hitting the bell icon so you won't miss any future live streams. I'm going to try to go live at least once every week or two, kind of for just an overall stock market update. On Sundays specifically tends to be when we do these, Saturdays or Sundays. That's when we would do them in the past before the futures market would open. And we're going to try to get back to doing those. And we also upload just general, not just stock market content, but business content as well. For those of you that don't know, I also own a business that most people would not really enter, a pest control business that most people wouldn't think about starting a pest control business, but I did. And we're starting to upload more like general business content in terms of, how to, simply form an LLC, what is an S corp, just all these different types of videos for, entrepreneurs are looking to start a business, trade stocks, just grow your wealth and become self-dependent instead of relying on the government at the end of the day is what we're all about here. So, if you're new to the channel, like I said, we'd love to have you here. We have a free Discord group chat. That's another thing. We don't charge for anything that's associated with this channel. You can go back through our library and see something like 300 to 400 different live streams and videos, from way back in like 2017 all the way up until today. And like I said, we're trying to go live at least once a week, 2 at the absolute latest, but I'm trying for once a week for you guys, unless if I'm on vacations or just absolutely swamped with business activities. And then also trying to upload at least one video. If I can't go live, then at least uploading a general video once a week for you guys as well. So pretty much you can look out for at least 1 to 2 videos a week or 2 is kind of the plan. And like I said, in our Discord group chat, I'm trying to be, as active in there as possible, especially Monday through Friday when the market is open and trading. I update you guys on all of my different moves that I do, what I'm holding, what I'm buying, what I'm looking at, all that kind of stuff. It's not necessarily that, I'm sending out trade alerts or anything. I do not suggest mimicking anybody's trades. But I do keep you guys updated in there as well. And I'll try to remember to put a link in the description box to join that group. There's over 200 of us in there, so we'd love to have you in that like-minded group as well. But yeah, that's pretty much it. Hopefully you guys have had a good start to your year. The year is already half over. If you haven't already, write down your plans, write down your goals first, and then your plans to reach those goals. And, just make it happen at the end of the day. But until next time, guys, keep on going out there, making your profits, covering your profits, achieving your financial freedom this year. And I will see you guys in the next video. Until then, take it easy, everybody.